Okay, welcome everyone. Wonderful to have you. I just want to check if Alex is actually in the room. I need to make him administrator. There he is. Oh, you're already a co-host. Okay, cool. Okay, awesome. Okay, so let's rock and roll. Let me share my screen here. So this is the Q&A session for day one. And I just remind you all that I'm not giving you financial advice. So I'm sharing with you my mistakes, my learnings, my lessons, etc., etc., etc. Now, the question I always have for everyone is, how can I help? I've got a bunch of thoughts and a bunch of things that I can go through in more detail. But before I go there, does anyone have any questions? Because the whole idea with these Q&A sessions is that they are unscripted. So they're the presentation. I basically, I'm here to help. So are there any questions that I answered? Any thoughts, any concerns, any different areas in terms of today specifically that we didn't go through? I know there's a number of wealth hackers that are on here, so welcome to all of you, and a couple of our mastermind members, which is always great to have you guys online as well. But how can I help? What is the value that I can deliver to? So there's two ways of doing it. You can either put up your hand. So if you go down to reactions, you can see at raise hand, so you can see my little hand comes up. And the nice thing is that it puts us in an order, so it makes it easy for me just to see who did it first. And or you can type in the chat box. So I will kind of go to people who ask questions live, and then I'll go to the chat box. So how can I help? Glenn, you're fast out of it, and then Max next. How can I help, Glenn?
Firstly, thank you very much for what you've done and what you've put on. Very well. I have invested in the past, but invested poorly. And I would say I'm a retail investor, and some successes, some not. So this for me is a massive eye opener. So thank you very much. So in your opinion, if you were starting again and you had a goal of getting to £9,000 or dollars in passive income, and you had a goal to get to that £9,000 by 2030, what would you do? How would you do it?
Okay, great question. So the good news for you first, Glenn, is are you going to be, I mean, we basically got this journey for the next couple of days on this challenge. And today I was going through the why, and we're going to go through now, over the next couple of days, we're going to go through the how, the what, the when, the who, and you're going to walk away with a plan. But I want to kind of just show you, because I'm going to answer your question, because on Friday, we're literally going to go through this calculator. So give me 2 seconds. I'm just going to open it up for you. So the one thing I just need to preface, if you haven't been part of a Q&A with me before, I don't have any physical presentations. So I do bounce around. Like, no matter what the question is, I have to go and find the answer for you. So just always give me a little bit of context, just a little bit of time just to find it. But if I go to Wealth University, so we've got what we call the Freedom Calculator. So we're going to share this with you, Glenn, on Friday. And it actually helps you build out an entire plan. So I'm just kind of giving you a little bit of an interlude. So in your case, I don't want to do it today, but in your case, this would be 9,000, as you said, dollars or pounds. The nice thing is it automatically integrates over here, so you can change this to whatever currency you want. So this could be British pounds, and you can basically, like, it automatically links it, etc. So I'm just giving you an example. I don't want to go through the whole detail, but you're going to literally get this on Friday. The other thing you're going to get is, I just need to find it here quickly, is a well planned. So you're going to get a well planned certificate. And this is effectively what you'll walk away with. So you'll walk away with, firstly, your why. So hopefully your homework tonight is your why. And then it'll be your how. Like, what do I actually, so you've just said, I want 9,000. And it'll be like, right, well, what do I actually have to do over the next, 2025? So it's the next 5 years to be able to do it by the age of 2030. I don't know what your age is, but it'll be your age. Do you understand? So
yeah.
I'm actually answering your question in showing you that you're in the right place, because for the next 5 days, you're literally going to walk away with a plan. That's our whole objective, is that I don't want to talk hypothetical or theoretical. I actually want to show you and say, look, you could do this, you could do this, you could do this. And by Friday, you walk away with a plan where it's like, okay, cool. Now I know what I need to do by 2025. And let me rephrase that. Now I know what I need to do in 2025 to achieve that by 2030.
Yeah, man. Thank you very much. I'm pretty pumped.
Awesome. So yeah, do me a favor, because I can teach you everything you just asked, and then none of us need to turn up for the next 4 days. But let's just do it in chunk sizes. And if I haven't achieved that by Friday at this time, then I'll make sure I cross the T's and dot the I's for you.
Thank you, man.
Awesome. Max, how can I help?
Hi, Scott. Yeah, thank you very much. It was a great presentation. The first one, learned a lot. Okay, I've got 3 small questions. You showed your platform view there, and there were some different investment opportunities. So that internal rate of return and the cash and cash return, is that the annual return, or is it over the whole investment period of, like, for example, 5 years?
Yeah, so let me get it up for you quickly. Okay, so everything's always annual, just to be clear, and everything's always net. So it's important to know both of those things. So when you look here, so the internal rate of return is your income plus your capital growth, and then your cash is just your income. But all of these are annual, and all of them are net after fees. So I hate it when the financial industry says you're going to earn 20%, but then you get a net 11. So we rather just tell you exactly what you're getting in your pocket. There is a great video which I will share with you. Alex, if you wouldn't mind just making a note. I need to find a place to save this myself. It is on the World University, but it's also the difference between internal rate of return, cash on cash, and ROI. Just in case, it's a short little video. It's like 5 to 8 minutes as a refresher for people. So I'll share that on the VIP group for everyone today. Just as a reminder for everyone. And then Max, what's important, just to solidify your question for everyone, is that, say for example, it's a 3 to 5, maybe even a 7-year investment. It gets calculated, but it shows you what your annual return is what everyone needs to know.
Fantastic, that's very clear. So the next short question is, what happens if that investment matures? Does you sell that investment?
Yeah, so it depends. Different investments are different. So each one has an exit strategy. So as an example, a structured note, and I don't want to get into all different types of assets right now, but a structured note just automatically closes and pays back the money, and that's it, end of conversation. A property actually has to be sold. So it might say it's closing on the 31st of July, 2028, but it actually has to be sold. You know, we've had it before where someone goes, "Oh, Scott, it said the 31st of July, and it hasn't, got my money back." It's like, well, dude, if you buy a house, like, you have to, like, that's the target date to sell, but you actually have to sell the house, just in terms of that process. So there's always an exit strategy, and then the target date is the aim to exit. But ideally, you exit the asset and you get your capital growth plus your capital back at that target date.
Okay, I'm asking that question because I live in South Africa, so we've got capital gains tax, which we need to apply over here. Does it apply in this case as well, if I do it from South African perspective?
Yeah, the proverbial tax question that I get asked every single Q&A session. It's very hard for me to answer that question because different countries are different. It depends on how you set it up, what your structure is, all of that type of stuff. At a mastermind level with our family office, we actually sit down and we help you with your personal tax and structuring and make sure it's all set up right. The simple answer to that, and Alex, I know you're online, so anytime you want to jump in and help, please do, in terms of the process. Alex, I don't know, you've got COVID, so maybe you're feeling sorry for yourself. But anyway, but I think the simple answer to it is that if you, like, so South Africa is taxed on your worldwide earnings in terms of your capital gains. So you'd get taxed on your capital gains, and you'd have to declare it on your income that year.
Okay, I've also got like an offshore structure in place. So in a low tax environment, where capital gains tax does not apply, will it be better to invest from that structure?
Correct.
Probably.
Yeah.
Yeah.
So that would then make sense. So you could be like me, where I mean, using our platform, you can use your offshore structure to invest.
Right. My last question is it like a age limit where you can start investing on the platform, or can I get my kids involved, for example?
Yeah, that's a great question, Max. Again, the answer is yes, you can. From South Africa, it does become a bit more of a challenge if because you're only allowed to move money out when you're 18 and that sort of stuff. But you've already got an offshore structure and stuff. So I'm a big believer in life. Where there's a will, there's a way. So my son started when he was 5, so there's always a way. And there's 2 ways of doing it. Either you could help them just under your profile get started, or you can set them up with their own separate profile and get them going.
Right. So can I make like multiple profiles for myself, allocate each one to my children?
Yeah, so the only thing you can't do, if I understand what you're saying, is that, say, for example, on my Scott Pickett one, I can see my personal one and my company one and whatever, but I can't see John T's one. My son is John T. I can't see John T's one. Like, I'd have to log in as John T to be separate. Does that make sense? You know?
Okay, got it. Thank you very much.
I don't like have a, it's not a function we've got at the moment, which is like, let's call it a family profile, you know?
Yeah. Okay, fantastic. Thank you.
Yeah, awesome. No problem. I see Alex said he put in some questions here. Maria, I see your question as well, so I'll come back to that. So let me just go into some of these questions. I assume, Alex, they're in order, so I can just go in the order that they're in the PowerPoint.
Yeah, I just put them basically from the first question down. So just in timeline in terms of that process.
Okay, cool. So sometimes questions come through that are not from the VIPs, but we still answer them because we think they're valuable for everyone and anyone when you're part of the VIPs. So as you know, I don't really do the Q&A when we're running the session because they already run a bit long, and I do the Q&A in the VIP room. So Liz said, can you please let us know how the homework, I need leave, many things. So I think there's 2 things there. One is that, okay, let me just find the right link to it. Here we are. So this should be like your golden page, which is where you got all your resources. So you can see you go to day 1, you click up here, and it's literally got the resources. I mean, the recording's not done yet, we just finished. But once it's done, the recording will be up here. But it literally tells you what your homework is. So what's your silver homework? What's your gold homework? It's got the link if you want to join the Wealth University group, the WhatsApp group, the next steps navigator, the investor strategy sheet. If you want to, I mean, you guys are already part of VIP, but just for others. And if you want to share with a friend, you can also, share it with a friend. So that whole Zig Ziglar, you can have anything in life you want if you help enough other people get what they want. So, but yeah, to answer Liz's question, everything is always there. The other place you can look is if you go to the university and you literally click on it here, just give me 2 seconds, you'll see that each day we've got a link. And if you go to this link, again, you've got the key takeaways. So I always give you what I believe are the key takeaways for the day. You've got the silver homework and you've got the gold homework in terms of the process, and then just some action items. And then people can literally go and write their comments below. So we've tried to make it as easy as possible for people. Okay, Marie said, do you have a translation of all these short cash on cash IRR? Yes. So Marie, that's what I was talking about with the short video. I will try to find it. I don't want to try and find it now while we're looking around, but I will put it in the VIP group. Alex, if you can just share with Marie the VIP group so we don't have to keep individually processing for her. And then I'll put it, Marie, if you can join the VIP group, then I'll put it in the VIP group for everyone. It's very important to understand the difference between them. Chris, how does the return now work, what you've just invested? Okay, so let's just take a deal like this Phoenix deal. So if you look here, it's basically got the investment calculator. So I'm just going to use $1,000 to make it easy. Okay, so the nice thing is that when you invest the $1,000, You can see exactly if there's fees, what the fees are up front. So there's complete transparency. You can see what the income return is. You can see what the green coming in is. You can see what the fee is are. So it's complete transparency. You can see when you get your return of capital. You can see what the capital gain is. And then basically you can see the net into your pocket. Now, if you invested $1,000 in this particular deal over the 5-year period, you're going to get back $2,082, which would be a cash-on-cash net of 6.61%, and a total return of 16.41%. So I don't know if Chris is here, but you can see, Chris, that the two different ways of calculating a return. The one is an income return. So how much did I get paid, every year? That's literally net income in your pocket. And the second one is a total return, which includes the capital growth, but it's also worked out annually. And just by the way, if that didn't answer for anyone else, please let me know in terms of the process. Okay, Jürgen, can you invest continuously every month at the same investment? So Jürgen, we don't have a debit order functionality. It's not set up to be able to do that at the moment, but you can invest every month. What I try and do is you can actually set up an automatic payment from your bank account where you can just send money to your Lemonway wallet, so that every month you're funding your wallet, and then you just go every month and choose the investments to invest in. The reason we don't have an automatic debit order is that from a licensing perspective, these are self-managed. So you actually are looking at the information and you're investing in the deal. We're not taking your money and just automatically kind of putting it into deals, because certain deals, might be better or worse for you in terms of that process. So, but yeah, you can set up automatic payment into your wallet and then just invest, as and when you like the deals that come up. We do try and kind of get new deals, coming at least sort of one new deal a month, if not two a month, so that you've got new deals each month to be able to invest in. Okay, and then Marie had a question here. Before investment options on Wealth Migrate, it says 5 years. Is the money locked for 5 years and then you sell the property so we get the capital gain? So yeah, it's a great question, Marie, around timing. So if we go back to this page here, so you can see here that each one of them, so this one's got a 5-year term, this one's got a 3-year term, this one's got a 5-year term, this one's got a 5-year term. So on average, they tend to be about 5 years. And to answer Marie's question, yes. So if you invest in this deal, it's no different if Marie and I buy a house and we're going to own the house. Her and I would be like, hey, how long are we going to own this house for? Should we buy it for 3 years? Should we buy it for 5 years? And we agree we're going to buy it for, let's say, 5 years. And then we say, right, after 5 years, we're going to sell it. And then when we sell it, we're going to take out our capital gains tax. So that's the exact answer. And yes, in the same way, when we buy a house, our money's tied up in that house. It's the exact same situation in this process in terms of where we're at. So hopefully that helps everyone. We do have, if you look here, we do have different types.
Question, Scott.
Yes, yep.
Go back to the scroll up. You have a carry fit and what is called the next. It's so small I can't read it. The next one, the Austin property. When you see at the cash on cash, they are smaller at the first than on the second, but the IRR are very different from the two investments. Can you explain on and expand on that?
Yeah, so this one, so this Austin one is a debt deal, and all it does is pay a flat debt income, so it doesn't actually have capital growth. I'll check with the team. I think there might be an error with the calculator there, because the point is it's paying you a net 8.75% every year in terms of the income. There is no capital growth. It's a debt instrument. in terms of it. So some of them have capital growth and income. Some of them are just purely income. And like I'll give you another example here. This is the way it should be if it's cash on cash. So this Manhattan one was a deal we did. It was a 1-year investment. It was a debt instrument, so it was 11.5%. And again, you can see the IRR, the cash on cash is exactly the same. So that one there, Alex, maybe if you can just make a note for me, because that needs to be exactly the same. Make sense?
Yeah, it makes sense.
The other thing I just wanted to show you was that we get different timelines. You know, this one here in Manhattan was a 1-year deal. We've actually got another deal coming up in Manhattan that was 1 year, that's coming up now this month, which is also 1 year. You can see we've got 3 years, most of them 4 years, 3 years. I'm just looking through here quickly. There was a 12 month somewhere also, but on average 5 years is pretty much there. Are 1 year again, 12 months. So you kind of get the idea. We do have a different kind of, let's call it diversification. But on average, I'd say 3 to 5 years is pretty much the stock standard.
I'm 67 years old, so I'm more into getting paid every month instead of a long-term investment and capital gain. So
yeah, but remember that a 3 to 5 year investment.
Okay, that's okay.
You're still getting paid either monthly or quarterly, depending. Different deals are different, but you're still getting the income every let's call it quarter. Every quarter you're getting paid that. So you know that's it's only the 5 years only when it exits at the back end.
Yeah, because the reason for the capital gain was to reinvest it, so I could get another income stream monthly or quarterly or whatever.
Yeah.
So it was just to make it faster in that sense.
Yeah, so about 80% of our 70-80% of our deals are property deals, and unfortunately, time is a necessity with property. You know, it just takes the costs to do a property deal, you know, to invest in the deal, to exit the deal, are too prohibitive to get in and out too quickly. You know what I mean? So just we find that the right sort of sweet spot is around 3 to 5 years.
We built a house and lived in it for 13 years and sold it for the double of what we have invested.
Yeah.
So I know it can be done in 13 years, but I don't have that time span till now.
Yeah, so we're not. None of our deals are 13 years. We're generally looking at 3 to 5. I think the longest one we've ever done has been 7.
Yeah.
And then the next question you had here was, when do structured notes come again? I had a meeting with Chad from Cashbox just before Christmas, actually, and everything's set up and ready to go. I'm actually waiting for an income producing note. He said they're looking to have one either this month or next month. So, I mean, literally everyone is back at work today. So I will follow up with him and find out where we're at with that. We're waiting for that. I want to start with an income producing note, not just a capital. The note they had in December was only capital growth. And we prefer to have income. You know, a lot of the people that are part of our community, the mastermind members, the wealth hackers, are looking to build passive income. I know, Marie, you're in the same boat. So we want to focus on income producing structured notes.
What will the minimum investment on a structured note be? $10 or $1,000 or?
Yeah, I'd like to say $10. So
yeah, I know.
So yeah, but I think we've just got to. I've just got to get the whole thing with Cashbox is we've got to have time to know about it, get it on the platform, allow people to participate. So I am waiting. I will follow up with Chad today. It's on my list of to-dos because he said it was one coming in January or February. So I'm just waiting to hear from him.
Yeah, because they have a $10,000 minimum investment. So if you have, let's say, $8,000 invested from members, then you miss the last $2,000. will you do that, or how do will
And well,
you
that's the whole idea with Wealth Migrate is that we're democratizing access. So our minimum will at at an absolute most, our minimum will be $100.
Yeah, but if I try to invest in a structured note and it there's not enough investors, I risk my money, so to speak.
No, you don't, because I mean, worst case,
Yeah, exactly.
it
That's
would
why I
be,
wanted to ask you.
worst case, it'll be refunded, but
Yeah, of course, but
that hasn't happened yet. So,
okay, thank you.
um, does Duracen? Sorry, I'm not sure if I'm pronouncing it right, but Duracen, are the investment returns shown guaranteed or indicative on each deal? So no, they're indicative. Nothing is guaranteed. It's important when one looks at it from a risk perspective that nothing. Well, firstly, nothing in the world is guaranteed. So people tell us that things are guaranteed. Money in the bank in Cyprus was supposedly guaranteed, and then the government took it. Alex and I had a meeting the other day where this money was in some sort of funny structured instrument in the stock market, and this financial advisor was telling us, "Oh no, but your money is guaranteed." And I was like, "How can it be guaranteed? Because if the stock market crashes, how do they guarantee it?" And then he was like, "Oh no, but we've got insurance for that." And I'm like, "Well, am I the only person who has not forgotten 2008 when the Canary Wharf Tower, their tenant was Lehman Brothers, and Lehman Brothers went bankrupt. And it was like, well, don't worry, they've got insurance with AIG, so they're protected. Well, do you remember that AIG nearly went bankrupt as well? And if AIG hadn't got bailed out by the government, then there would have been no insurance. So just to be clear, I'm not a big believer in guarantees because they generally don't hold any water when the shit hits the fan. And I'm sorry to be direct, but that's the truth. So what is more important is what is the due diligence, who are the partners, what is the substance behind the investment, and things like, let's call it the Manhattan opportunity. You do have a first mortgage over the property and things like that. So Durstein, I hope I'm answering your question. They are much more target returns or indicative, to use your word. They're not guaranteed, but there are different investments. There are structured notes where the capital is guaranteed, etc. But I don't know. I always get scared with the word guarantee personally. JP, how long can it take for an investment to initiate pending status 31st of December? So what we do with some of the investments, JP, is we do them in tranches. So if it gets to the end, depending on different investments, but the end of the month, what we'll do is we'll close a tranche, we'll send the capital to, so as the example, the Phoenix deal, we've got what's called an equity release there. And so we can keep investing. So we just do it in tranches. The Austin deal, it's basically is an ongoing deal. So we just do it and we close it in tranches in terms of it. But I would say ideally with us, from when we close it to investing, we're looking to get the capital to the partners as quickly as possible in sort of a 2-week period or so, and so that we can be earning returns as quickly as possible. Shawana's asking what a structured note is. I'm going to answer that for you. I can't even remember now. I think it's tomorrow. It's either tomorrow or Wednesday. I'll go into that in a little bit more detail. Yeah, I mean, we're going to go through Cashbox. They're our partner. So I'll literally share that with you tomorrow or the day after. Okay. Yeah, I mean, it's one of the assets that we use. I do, actually, I don't want to jump ahead, but in simple terms, if I go to, let me just show you, because I think it's quite important on the structured note. So if I share my screen, this is just in case you can't make it tomorrow.
No, I'll be here.
Let me, just for everyone else, we're talking about it now. So let me, I'll give you the simple version here. So if you take a structured note, you and I go along to the bank, and the bank kind of is paying us, depending on where you are in the world, sort of 4 to 8%. So they call that a retail investing. Then you got wholesale investing, where they're getting kind of 8 to 10%. And then you got institutional investing, which is where they're getting kind of 10 to 15%. And so this is where the whole structured note came about at this institutional level. And the problem was you originally needed $2 million to invest in an individual structured note. So it was literally the realms of the wealthy. And then what's happened with technology and fractionalization is that effectively now you can get access. So that's what Marie was asking us, is how can we get access to this level of investment with this level of returns, but with far less money? And that's a teaser as to what structured notes are. But I mean, you can get sort of 10 to 15% in pounds and euros and dollars, but they don't have any capital growth. So they're a debt instrument. They only pay income. But yeah, I'm not going to go into all the detail, the risks and everything. There's a whole module where we go through each asset class. We actually call it asset class mastery. And again, I'll give you a little teaser here, just to back up Marie. So if you go to asset class mastery, I'll go into this more tomorrow on Wednesday. I can't remember which day it is. But if you go to structured notes, we have an entire course on structured notes, and it's actually given by Cashbox. So it literally takes Chad there from Cashbox, taking us through what is a structured note, what are the risks, how does it work, et cetera, et cetera. I'll tell you a little story about structured notes that I find very irritating. So Chad came to me in 2019. So Chad's been investing with me. He started in Australia in 2011, and then went to America, et cetera, with us. And he came to us in 2019. He said, "Hey, I've been investing in structured notes. You should look at them. Like just how you're fractionalizing hospitals and medical centers, you should do the same for structured notes." And I was like, "What the hell is a structured note?" Okay, now I'll be frank with you. And again, I only tell you my degrees, not to boast, but to actually make everyone else feel normal. I've got all the degrees. I've got the degrees, the honors, the cum laudes, the everything. But I'd never even heard of a structured note. I was like, what the hell is that? So anyway, he explains to me what a structured note is. And I'm like, and then he tells me what the returns are. And I'm like, yes, that sounds like, again, too good to be true. I tell you what, I'm going to ask our top 100 investors, how many of them are participating in structured notes? As it turns out, the top 100 investors we have, 81 of them are investing in structured notes. And this one gentleman comes back who's part of a private bank, and he says, "Oh no, they've been the best performing asset that he's had for the last 10 years." And that's actually when I got quite angry, because I was like, there's this whole little party going on that I haven't even been invited to, that I didn't even know about. I didn't even know what the word meant, let alone how to participate. And it actually really pissed me off. And so, yeah, we started fractionalizing them. I actually helped Chad come up with the name, Marie, just for the record. I literally came up with the name Cashbox. And you know, we started fractionalizing it. And yeah, so it's been, I think 3 years now, 4 years. I don't know exactly how long, but where people can participate, where you don't need $2 million now, you can actually participate from far smaller amounts. Natasha said, "Is this the same as a REIT with us acting as a collaborative investor group working via Wealth Migrate?" Yeah, Natasha, it's a great question, and the answer is no. So what is a REIT? Just for everyone else, a REIT is a real estate investment trust. And the way a REIT works is that you've got a fund manager, and let's just say they're sitting in America, and they go and buy a whole bunch of property, a whole bunch of real estate, whatever you want to call it, in America. So you give your money to the REIT, and then they take your money and they go and invest in multiple different assets. We're very different. We help you invest directly into the property, directly with the partner. So we cut out all the middlemen, we cut out all the costs. And the big thing that happens with a REIT is that if you've got one really good asset and one pretty shitty asset, they blend the two together and you get this like blended return, minus all the MBAs, the CAs, and the lawyers' fees, and then you get this kind of blended return over here somewhere. We just help you invest directly in the property. So you're getting the return here without the costs, without the middlemen, and you have the ability to diversify into different assets. So it's more about being in control. And the metaphor I use with a smile on my face is when people say to me, yeah, but this is the same as a REIT, whatever. I go, cool. Well, when I get to London, to Heathrow Airport, you've got the sort of the black taxi cabs and you've got Uber. Like they're both a car, they're both the same. They both have four wheels and a driver and a steering wheel. But are they really the same? No, they're not at all. Like the one is using advanced technology to cut out the cost of the middleman, to make it much more accessible. There's much more trust, much more transparency. And the other is kind of an old way of doing it. That's the metaphor I kind of use because people can understand it. They're the same car, but technology greatly enhances the process. Okay, Andrew, thanks so much for coming up with another solution for us, making structure notes accessible. Yeah, look, let's be frank, it was Chad that opened my eyes to what they even were, but we were the ones that helped them fractionalize it. Boom, 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 boom. No worries, Natasha. Trevor said, just by the way, there's some articles. Let me show you here. I don't think we offer this, but I'm happy to put in a link for people in the. So we've got a thing called an e-wealth pack that we built a little while ago. Here it is here, and people basically. So I'll put this in. All you got to do is sign up, and you'll get access to the e-wealth pack. I'll give you the free link. Why is it not letting me go into it? Here it is. So basically, in this e-wealth pack, you get access to all the different, like we got the white papers, we got all the different books. I used to get asked all the time, like, what books do you recommend? And like irritated me. So we built this where you got like the best books on the mind, life, goals, real estate. I actually need to upgrade this. Books on, property, investment, business, etc. And then there's a bunch of resources. And the only reason I'm showing this is because of the question I was just asked. But there's actually a question here on direct real estate investing versus REITs, versus syndication, versus crowdfunding, versus collaborative smart investing. And then does Wealth Migrate do crowdfunding, or is it more advanced? So these two, I'll just put the link in here for everyone, make your life easy. I'll put in the VIP room for everyone, in the VIP WhatsApp group, because then it kind of stays there for people. But yeah, it's hopefully explains it. It's an old article. I wrote it a while ago, but hopefully it'll explain it to you. But just by the way, I'll make it easy for you. But do you want me to put in the e-wealth pack link as well?
Okay.
Yes, no. Sorry, I'm not looking at the screen, so if people are doing me thumbs up, I can't see. Okay, I'll do the wealth pack as well. Okay, hope that helps. So there are, Natasha, you've got a bit of reading to do on the difference. Dursen, investing requires having surplus income set aside, but most people are stuck in a paycheck to paycheck cycle. Do you offer guidance, education on personal finance management to get out of the cycle and have surplus funds to invest? Yeah, that's a great question. And at the moment we don't, but I do it ourselves, but we've got partners that do it. So I'm going to introduce you tomorrow to Anne Wilson. And Anne's amazing, and she's got programs to be able to help people with that. So I will share with you tomorrow how to be able to do that in terms of building your plan, your financial plan, so that you can achieve it. And I hope I'm pronouncing your name right, Shauna. Black cabs have the knowledge. They do. It's incredible. You've got to drive the cab for 10 years, and you've got to have all the knowledge, and then you can only qualify. And it's amazing because I too have the same knowledge as the black cabs. It's called Google Maps. I'm sorry to say, but it's the truth. It's like in the old days, they used to get a stamp of approval because they had all the knowledge and they could drive it, every road in London, and they knew all the back roads. Well, I mean, seriously, I got Google Maps. And if Google Maps doesn't work, I got Waze, and if that doesn't work, I got Apple Maps. How are Wealth Migrate selecting investments and what does the pipeline look like? Richard, I'll go through that on Thursday with partners and how we do due diligence and the deals, etc., etc. Sorry, I know I'm bouncing around a little bit, but I don't want to kind of jump too far ahead, otherwise it's going to mess with your flow. So great questions, and I will make sure that they get answered for you. Guys, I need to add the eWealth pack. Marie, when I send the money through to my account of Wealth Migrate, you won't pay the transfer fee. Alex clearly stated that I'm not allowed by my bank to pay it on behalf of will it. So there's no fee from when the money lands in your Lemonway wallet. There's no fee. If your bank charges you to send money from your bank to Lemonway, we can't help that. There's nothing we can do about it. But there's no fee on our side or Lemonway's side in terms of putting the money into the Lemonway wallet.
Yeah.
Yes, but they won't pay the last part from Lemon to you. So
I don't. Yeah, Alex, do you want to help? Sorry, I don't understand the problem.
Yeah. Maybe this is something that we spoke about at the Passive Income Challenge. So Marie, if I'm understanding your question correctly, when you're doing a payment towards Lemonway, there is a question that pops up that are you going to pay the fees? Are they going to pay the fees, or are you going to split the fees? Lemonway does not pay any fees, so the fees has to be towards yourself, meaning when you're transferring the funds, any intermediary fees between when your bank's sending the money and it lands with Lemonway will have to be facing towards your account. Otherwise, Lemonway will just block the transfer and send it back to you, and then take fees off of your funds that you're spending. So unfortunately, they're not. They run a very good business in that sense.
Well, no, but it's fairly obvious. Like if everyone let Lemonway pay it, it doesn't work like that. Like it's not possible. Like at the end of the day, it's going from my bank account to my Lemonway wallet. It's my problem to get my money in my bank account. It's not their problem.
But I have tried international transfer before, and I could either let the far end pay for all the fees, split it in two, or pay all the fees myself. But I don't have the option here. I can only split it. Do you understand?
So what you're saying is that your bank is not giving you an option to pay everything. It can only be split between.
No, I can only pay half of it. And if I want to invest, what shall we do? Because it's the two ends outside of Lemonway that we have to discuss what we do.
Marie, maybe let's take this offline, and then let me help you understand what bank it is and so on and so forth, and let's try and get you an answer.
Yes, but it was just so it was if someone else has problems as well, so we can perhaps get the result when we find out. Thank you, Alex.
No problem.
Maybe we shall take it us two alone.
No problem. We'll do.
Yeah.
Perfect. So what else can I help you with in terms of any other questions for today? I don't think there's anything else in the PowerPoint. Is there anything else? I mean, if we go back to, let's go back to this page here quickly. Here we are. So I just wanted to kind of show you, because what I learned a long time ago is trying to synthesize, so like what your key takeaways are. So what I learned whenever I do courses, I always, if it's 1 day or 5 days, it doesn't matter. At the end of every day, I try and say, like, what are my key takeaways? What are like the key things? So you try and take all the noise and you try and synthesize it into a couple of things. And so for me, when Shane said to me, he said, Scott, what are the kind of key takeaways for today? And again, I highly recommend that you go and write down like what your key takeaways here are, not only for yourself, but for others. But mine and the ones that I try and share with people are, what are the lessons from Tony Robbins? So the difference between the dabbler, the stressor and the master, then why diversification is the single most important component to financial success. And hopefully I proved that to you with the different people, the different businesses. The 5 myths that are stopping people from doing it. And then, again, real people, real stories. If all those other people can do it, then you can also do it. Those for me would be the 4 main key takeaways for today. But what are yours? Go and add them here. Let people kind of know what's happening in terms of yours. And I do remind you, there's prizes and gifts and giveaways in terms of that process. Okay, how do you find out about private equity investments? That is Thursday. So on Thursday, I'm going to go through that in more detail. Sorry, I always got to try to remember what I'm doing on each day, but yeah, there's a structure to what we do. So on Thursday, we go through partners, and on Thursday, I bring in our private equity team who are going to share with you about how to find the right partners and private equity, etc. Okay. Anything else from anyone else? So my closing thoughts on today, and I'll answer Marine's question now. Let me just finish my train of thought. My closing thoughts on today is I tried to set up a container of why diversification is important. And now for the next week, as per Glenn's very well scripted very first question, we're actually going to go and get specific and go, right, if I need 9,000 by 2030, how do I do it? What have I got to do? Who do I do it with? And by when do I do it, etc. That's the logic of what we're doing. Ben, I can see you got your hand raised.
Yeah, just a quick one. Tomorrow I've got a business meeting, so I won't be able to make it. How soon will the recording for tomorrow be on, so I can watch it when I get back?
Yeah, so we try and do it. I mean, the moment this finishes, most people know how Zoom works. It like curates the recording, whatever, and we upload it. The only challenge we have is my partner Shane is actually moving house literally today. So our usual efficiency might not be, but worst case, I will just put the link in the VIP group for you, the WhatsApp group, even if it's just a YouTube link for now, so that you've got it. Glenn, to be able to get access to it. But it certainly happens within a couple of hours, like of today. It'll be up, mid-afternoon today.
Yeah, that shouldn't be a problem. I should be back for about 5 o'clock, and I can just jump on it after 5. So thank you very much.
Awesome. And Maureen said on the investment we did in December, what if I want to add to the Austin deal, or is it going to be another investment? So Maureen, just like myself, so I invest in stuff on a consistent basis. So if it's the Austin deal, it'll just be a new tranche. So it's the same deal but a different tranche, and that's why you can kind of keep investing as and when you've got money to invest. Do you have a non-QR link for the VIP WhatsApp group? I do. Let me give it to you quickly. I'm going to put it in the chat box for everyone in this meeting. There it is there. What is a tranche? A tranche is where, like, say, for example, you've raised $100,000, you close it, you send the $100,000 to the partner, you start earning money on that $100,000, you start raising a new tranche, and then, I don't know, at the end of January, you have another $100,000, you send that. So the idea is that you want to do it so that the money's working and you're getting returns on the money. Natasha, you are investing directly through Lemonway. So when I showed you today, I'm using my Lemonway wallet. So this wallet here is a Lemonway wallet. So when I click on it here, this is my wallet. It's my personal wallet via Lemonway, but it is my wallet in terms of the process. So if I log in, it's all happening through Migrate. Everything's in one place. Trust me, we've aimed for simplicity. So you've got all your different investments here. You can deposit money, you can withdraw money. Everything's all in one place. And look, Alex is going to talk more tomorrow about our 30-day challenge, which is our passive income challenge. And that starts next week, Wednesday, where he literally takes you step by step how to use the platform, like how to sign up, how to fund your wallet, how to invest, how to get a result. Anything you want to add, Alex?
Nope, looking forward to it. Launching the first one for the year. So we'll discuss the details this afternoon and get everything live. So by tomorrow, when we're on screen, we can start sharing with everyone. Looking forward to it.
Awesome. Okay, Ryan. Well, if there's no more questions, that's everything for today. Sorry I ran over a little bit today. It's a lot of information on day one and setting everyone up for success. You know, there's people say to me, why do you have psychology? Well, it's critically important. The mind is what is going to help you actually get your results in terms of that process. I hope you enjoyed it. If you've got any questions, if you've got any constructive feedback as well, happy to help with anything in terms of the process. Otherwise, we'll see you same I can't speak English. Same time, same place tomorrow morning. And we will be going into how to actually find the top countries, how to find the top currencies, and how to find the top 15 assets to be able to invest. So tomorrow is a big day in terms of the how and where we go. Have a wonderful day, everyone. Cheers.